So, how much do we need to be concerned about artificial intelligence? Today, we're going to take a look. Stay tuned for Prudent Money. Good afternoon and welcome to the Prudent Money Radio Show. I'm your host, Bob Brooks. Thank you so much for joining me today. You know I do appreciate it. Well, if you got a question for me, I've got a resource for you. Just go to prudentmoney.com and to go to the top of the page, there's a link that says Ask Prudent Money. And we'll get you all taken care of. Just send your question in and we'll reach back out to you. That's all at the website, www.prudentmoney.com. I've been talking about the artificial intelligence movement, the boom that is on everybody's mind today as far as stock market investors anyway. History can always tell us quite a bit about what might be in front of us, and there is no better history to be looking at than what had happened to the markets during the tech boom in the 90s that ended up in the middle of 2002. Losing up to almost 50%. So can you imagine your investments in mutual funds and your 401k plans going from, $500,000 down to 250,000 or 100,000 down to 50,000? Well, those things were happening. And I really do think we can learn quite a bit from what happened there because we're starting to track exactly with the tech boom and the tech bust. And I've been doing a lot of research on this. And one of the things that I've come up with is that where we are today and where Wall Street thinks we should be with AI and the application and implementation of AI is a very, very broad and long road that nobody knows what's really going to be on that road. But the thing we do know is that there's going to be a lot of potholes. There's going to be a lot of wrong turns off of that road. So I call it the nasty transition. And that's the problem, is that where we stand today with technology investors and people who think that this is going to last forever, it may. I may be wrong. I think history's going to have a lot to say what happens with this particular period of time. But let's talk a little bit about an article that I think is just absolutely a perfect article for anyone to go through and read, that does a very good job of describing what's going on today. And it's called "The AI Boom is Looking More and More Fragile." It's a big red flag when you start to see articles like this, and then in the contrary, you see investors that are just over the top positive or bullish about AI. Even with these articles coming out, I think I told the story last week about the fact it was about the tech boom, and I was in a conference in London. And the gentleman who was speaking at the conference said, you investors in the United States are going to have a really tough time because this tech bubble is going to burst. And we said, yeah, whatever. You probably don't know what you're talking about. That was back when we were young advisors. And sure enough, that happened. Wish we would have listened a little bit closer. But being young, you live and you learn. Actually, being old, you live and you learn too, I guess. So let's talk a little bit about this article, because I think this really does give you a good look at what's ahead. And also, I think will quieten the fears that we've got a massive unemployment situation on our hands. Now, we may have an employment situation on our hands because of the economy being weak and going into a decline, going into a recession. We very well may have a problem with that. In fact, I think there's a good potential for that to happen. I don't, however, think that it's going to be because of the AI boom is going to replace all these jobs. Now, to be fair, and we do know for a fact that some, when I say some, that could be a lot, that could be a small amount, but there's going to be some loss of jobs just because of what's going on today. But I think what's going on today to really get out, and we'll talk about this in a minute, what you really need is the infrastructure in place. And this, like I said, this article in the Wall Street Journal, I think really does explain the problem. Now, here's the overall bigger problem that we face here, is that Wall Street has taken these big companies that are behind the AI revolution and valued them. Or said another way, say you have ABC stock that's a big tech company and they're selling at $100 a share. Well, Wall Street looks in their future and says, well, based on your numbers, this is where you're going to be in 10, 8, 1 year, 2 years, whatever time period. And it's not at $100 a share, it's at $175 to $200 a share. And that's where we think that you are. That's perfectly fit for that valuation of your company. So the stock automatically starts trading up towards where Wall Street thinks where Wall Street thinks that it's valued. So I hope that makes sense, because it's a very important point to make, is that these stocks are probably, with the infrastructure issues and different things that are going on, don't have the attributes of the evaluation that Wall Street says that they do. Today they don't. They're not even close. In fact, it's historically overvalued. And so there's going to come a point where investors realize that, and they're not going to, we're not going to buy XYZ company at 200, but we'll buy it at 120. And so you're looking at, for XYZ company to become attractive again, it's going to have to drop 50, 60% in value. And that's a very tough process to go through. But here, let me read some of this article to you. Perfect isn't good enough. And that's the thing. If you're paying this much for a stock, that stock better be perfect. And they're saying here, perfect even isn't good enough. And any sign of weakness is a disaster. Let me say this, that you don't see articles with that kind of writing in it in a bubble or boom industry like AI is, where they are in its infancy. You see it when things are starting to come apart. That's where I think we are. Justified or not, that's the current mood in the markets about the AI boom. Recent history suggests that the gloom won't last, but the shakeup serves as a strong reminder that the early years of AI pose a challenge for investors accustomed to measuring returns on a 12-month time horizon. History suggests that the gloom won't last. Maybe, maybe not. But it's going to be an extremely bumpy ride, and I think it's going to be a lot longer bumpy ride than anybody's predicting. It's just there's a lot of moving parts here that have to be accounted for. Generative artificial intelligence service requires massive data centers and state-of-the-art chips and server racks that don't come together quickly. The companies at the heart of AI now are talking about years, plural, of major investments still ahead. So this is just exactly like when the government during Biden's administration came out and said, we want everybody to be driving electric cars. I don't know what it was, some ridiculous time period. And by 2027, everybody needs to be driving electric cars. We want to see massive changes in the production of automobiles, and we want to see progress towards this new innovation of automobiles. Well, what nobody, they had and I can't think of his name, the guy that's in charge of the whole thing, they're interviewing him, and they go, "What if you don't have the infrastructure?" And we don't have the infrastructure in this country for electric cars. For everybody to be driving one, there's absolutely no way. He goes, "Well, we'll build it." Well, it's a little bit simplistic and a politician's answer. You're not going to just build it. I think one day we'll see that kind of a situation where we have a much bigger percentage of the population driving electric cars. But that won't come cheap, and it won't come without major effort, intentional investment into an infrastructure that by today's standards does not exist. They could not handle. I think that the number of electric cars that are out on the road today, I think that there's fairly good infrastructure to handle the needs of that population. I love the thought of an electric car. I'm not against it at all. But here is some of the things that are the problems with AI stocks. And I'll go ahead and go through these, and then from there we can read through some more examples of what I'm talking about. And I'll tell you, this is what you need to get if you're an investor. This is what you need to be watching, and this is what you need to be looking at when it comes to anything that's S&P 500 index related. I'll talk about that here in a minute, because S&P 500 index funds, and that index fund is something that tracks exactly what the market's doing, is 35 to 40, something like that. Now, maybe a little off either way. Big tech stocks. So the S&P 500 has become a lot more on the risk scale, a lot higher on the risk scale than many think. Hey, this is Bob Brooks. I'm up against a break. Way more to come on the other side of the break. We'll be right back. Hello, this is Bob Brooks. Proverbs 22:3 and Proverbs 27:12 are the exact same verse word for word. I call them the stewardship verses of risk. A prudent person foresees danger and takes precautions. The simpleton goes blindly on and suffers the consequences. On the Prudent Money Radio Show, we teach about risk, how to identify it, how to figure it out, and what to do about it. We believe that to be a prudent steward, you have to be a good risk manager. Listen to the Prudent Money Radio Show on Bible School Radio 91.3. Prudent Money, home of the modern day steward movement.
Dynamic, practical, life-changing.
There's no point in going to church and not letting the Christ who gave birth to the church on the day of Pentecost change your life.
Join us each day as Pastor Paul Shepherd applies the timeless truth of Scripture to everyday life. It's Destined for Victory on this great station.
Weekday afternoons at 3:30 here on Bible School Radio, KDKR.
This is Rob Randall, your host and teacher of the Invisible War radio program. The Invisible War is the study of God's Word on how to walk in Christ's victory in the spiritual battles we face against the powers of darkness. Join me every Sunday morning at 9 right here on KDKR and KYJC in Commerce, your station for life.
Welcome back. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. Hey, there's a couple of things I want to alert you to. Go to the website if you want to listen to the podcast, and we do podcast every show. It ends up posted about 5 o'clock and after the show's over. And we do post every one of those shows, so you can listen to that. Plus, sign up. I was thinking about this the other day. I just do not mention this enough. Sign up for the email e-letter. The email e-letter is hard to say. List, and we'll keep you posted on everything that you need to know. And we're writing and posting and doing all kinds of things. So go check it out. Just sign up for the e-letter list, and we'll keep you posted on what you need to know. That's all at prudentmoney.com. And if you've got a question, top of the page, you know the drill. Prudent Money, ask Prudent Money, and click through the link, and we'll get you taken care of. Now, here's the things that we got to keep on the fresh on the landscape. The first one is we have turned into an investment community that wants it all now. And it's just like with President Trump and these tariffs. Before he came in to office and stirred all that up, it would take a minimum of 3 years from very beginning of talks to implementation of a new trade agreement just to get one country on board. And now he's acting like, and the administration's acting like, well, they can do it in 2 days or 1 day. Now, and it's a lot like investors. They're locked and loaded. They've heard the story. They heard the technology. It's going to change lives. It's going to change the way we do everything. I got my investment in it. Get me some return on my money. Doesn't work like that. Doesn't work like that. Number two, we've already talked about it, but let me mention it again. The infrastructure. We do not have the appropriate infrastructure for this to go at this breakneck speed that investors want it now, or that Wall Street is valuing these companies. We do not have it. We're not ready. Once again, I'll read this one sentence, this one paragraph to you. Generative artificial intelligence service requires massive data centers and state-of-the-art chips and server racks that don't come together quickly. The companies at the heart of AI now are talking about years, plural, of major investments still ahead. So just think about that for a second. This has turned into, because the valuations, into a massive bubble. Now, a little bit different I think it will end up bursting. You'll see quite a bit of losses. Then I think that they'll pick up the pieces and start again. And at some point, this is all, I do believe, will all become a reality. It's just not going to come together as quickly as people think. But those are some of the things that you want to consider. The other one is it's priced. These stocks are priced to perfection. So don't tell me anything that I don't want to hear, because I'm going to sell your stock if I start hearing a lot of things. And here's the issue with these stocks being priced to perfection, is that investors are going to give them a pass on a lot of different quarterly reports that don't match up with what they're saying. What they're saying and they're doing are two different things. They're going to give a pass for a while until the investors start to realize, hey, this is not going to work out like we thought that it was, and not a good thing. This next sentence, I think, tells a lot of the problems that we're also going to have. OpenAI says it is planning to spend $1.4 trillion in the next 8 years. Now, this is always what's been interesting to me with Wall Street, is that these companies can come out and make these outrageous statements, and then investors will start buying the stock based on that. There's no guarantee that they're going to spend $1.4 trillion in the next 8 years. They're projecting it, and most of the time they don't spend that kind of money. Remember, price to perfection. Back to the sentence. But it is pulling in only around excuse me on this one, $20 billion of annual revenue today. So they're going to be spending $1.4 trillion in the next 8 years, and they're pulling in around $20 billion of annual revenue today. And it lacks a clear business model. Going back to what happened in 1999, I sat in on some of these investor meetings where these companies, the internet companies, were pitching these companies, and they didn't even have an infrastructure built or anything. They didn't have barely even had a clear business model. And I'm telling you, people were just throwing money at these companies right and left, knowing they were going to go public, and they hadn't even made a profit yet. Same thing, lacks a clear business model. To reach the hundreds of billions it needs within the next few years to keep spending growth going. Then we get this. Okay, all that sounds great, right? Then it says OpenAI is already projecting their losses will swell to $74 billion in 2028. Seriously? Does that just make your head hurt? It does me. OpenAI is already projecting that losses will swell to $74 billion in 2028. Of course, when we're talking about the trillions, 74 billion is not a big number. Here's something that really, really does disturb me, though. Another source of concern lies in the huge amount of leverage needed to finance the outsized ambitions of AI's biggest players. Now, anytime that you hear leverage, what they're saying, and I'm telling you, every time you hear the word leverage, alarms should be going off, because leverage is debt. Debt is what we're talking about. And I'm going to read this to you again. Another source of concern lies in the huge amount of leverage needed to finance the outsized ambition of AI's biggest players. What could go wrong? Quite a bit, actually. Then there are the inevitable hiccups from shortages of power and other supply chain bottlenecks. And that's the other thing, too, is that do we really have the infrastructure on the electrical grid to handle this? I don't think anybody knows the answer to that. Well, I think they can guess, but this is new frontier that we're heading down, and anything can go wrong. And as an investor, I want you to be really careful. Here is the one more I want to read to you. Probably, let's see here. Probably the last. Let me double check. Nope, there's one more thing I want to read to you. Other suppliers to the boom haven't moderated their tone at all. You know, the suppliers, they're stock full of product to put to work. If anything, they appear increasingly bullish. Of course they are. They're set to work. They're waiting on these other companies with the big ambitions, buying debt and running their companies at these outrageous valuations. NVIDIA has already projected revenue growing 56% year over year for the fiscal third quarter that it plans to report next week. The revenue is supposed to go up 56%. How can it go up 56% in this environment? We'll see. Once again, as I always tell you, and I humbly say this, it's just an opinion. Then it says, but after 3 years of booming investment and no clear financial model for profitable AI, breakouts of fear and fatigue among investors are inevitable. And that's something that's kind of a phenomenon that we're seeing. And I've talked about it in the real estate markets, is that we've had now 3 or 4 years maybe, I've lost track, of a kind of a depressed real estate market where people aren't buying, and everybody's waiting on the interest rates to come down, waiting on the interest rates to go down 1%, 2%, been promised they're going to go down, and they just go up. And I think that real estate buyers and sellers as well are suffering from breakouts of fear and fatigue. And I think we're going to see I don't think we're there quite yet, but I think that at some point, and when investors get like that, guess what they don't do? They don't invest, and they don't put money in these companies. So I hope that made sense. I know that some of the language and some of the concepts are not easy to understand, especially when you don't have visuals in front of you. I always talk about that being on the radio. But it is something that you've really got to watch out for. I think worst case scenario, we got a bubble and it's going to burst. Best case scenario is that we're going to have a lot of extreme up and downs because of the shifts of things working, not working, because timetables were accelerated to be done a lot sooner than these projects actually can. And then you got situations like the grid, the electricity, the power that's going to be needed. how's that going to all work out? I think there's so many questions. So as an investor, I would know my risk level. We'll talk about that tomorrow, actually. But to know your risk level and be clear as to what makes sense and what doesn't make sense, and be the prudent steward of what God has given you. Hey, this is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thanks so much for joining me today. You know I do appreciate it. Listen, if you got a question for me, please go to the website at www.prudentmoney.com and just send it in and we'll get you taken care of. But today we are all out of time. Till we do meet again next time, keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.